Good morning, this is Paul Harris for Kitco News from the PDAC Exploration Conference in Toronto, Canada. I'm joined this morning with Amir Adnani, Chairman of GoldMining. Morning, Amir.
Hey, Paul. Good to talk about gold now.
Absolutely. With GoldMining, you've been acquiring projects, building up a bank of gold deposits, and you've recently been active again acquiring another project in Idaho this time. Tell us a little bit about that and why you made that acquisition.
This latest acquisition really checks all the boxes for what we look for when you think about our acquisition strategy since 2012. I mean, for 8 years, year in and year out, our company has been acquiring resource stage gold projects in mining-friendly jurisdictions, and doing it in basically at less than the replacement value of the exploration work that has happened there, drilling, etc. And just looking for good deals, win-win deals. And this checks all the boxes. Here's a project in Idaho, which is seeing a lot of development stage projects move forward today. It's a mining-friendly state and region. Close to 70,000 meters of prior drilling has happened already. So it allows us to come in now, work with a qualified person to look at a resource estimate on the project. The project has a low holding cost, and we were able to acquire it for less than $1.5 million. Okay. So it checks all the boxes for what GoldMining looks for during a period where we feel, despite the fact that gold prices have been generally low, I'm saying generally over the last 8 years, not the last obviously 6-9 months where we've had a stronger gold price. Every major gold producer has been slashing exploration and development. Pipelines are basically at a decade low. We felt that was the best time to be building a large portfolio of resource stage gold projects.
And how many ounces do you have now?
We have in our global portfolio, which spans 5 different countries in the Americas, 10.5 million ounces of measured and indicated gold resources and 12.4 million ounces of inferred gold resources. Paul, I mean, as an expert on the field yourself, you would know there aren't many, and in fact, I don't think there's another junior company pre-production that has that large of a portfolio, especially in a diversified setup out there. So, and it didn't happen overnight, and it really required an extensive, brutal bear market for this to be possible.
Okay, you've made several acquisitions in Colombia in what is called the Middle Cauca Belt. So you've sort of consolidated quite a district there. So what's the strategy there?
To some extent, we became interested in that area, first of all, prior to some of the recent exciting sort of developments there. I mean, as you know, right now, you talk to the major companies, and they really view that Mid-Cauca Belt as really one of the least explored parts of the Andean belts when you consider the developments down in Peru, Chile, and Argentina. And for various reasons, historically, this area was underexplored, and we quite liked it. And so does Newmont, so does B2 Gold, so does Anglo Gold Ashanti, and recently China's Zijin Mining with their acquisition of Continental Gold. We made our first acquisition in this area in 2016 with the Titiribi project. Added another project in 2017, and then our third one most recently, all basically within a 10-kilometer distance of each other. So we are, our thinking is, this is a fantastic address and location to be in. I think there's close to 100 million ounces of gold that's been discovered here in the last 10 years. So we want to be there. You're getting that vote of confidence from the majors and the money that they're spending to build a position here. And we've managed as a junior, in fact, again, the only junior that has tied up 3 acquisitions in that area. All 3 acquisitions have drilling that has happened. On the first 2 alone, Titiribi and La Mina, there's well over 200,000 meters of prior diamond drilling. And we are hoping to put out a resource report on our 3rd acquisition in Colombia very soon. Okay. And so we're going to demonstrate quite a commendable position there, both in terms of the projects and total resources that we'll be able to talk about.
Okay, you mentioned that until recently the gold price has been sort of going steadily up. So how is that changing your strategy, changing your ability to source new projects? And does that sort of start leading you towards another phase of the company's development?
It's a great question. And so a company like ours really is going to have 2 very distinct phases. Phase 1 is where we're out acquiring and consolidating. and phase 2 will be a phase where you sell, divest, joint venture, and basically crystallize value for a portfolio that you acquired during a bear market time frame. Clearly, with this latest acquisition that we made in Idaho, we're signaling and we're demonstrating that this is still a buyer's market. And I think we're going to have to see, and you've noticed it as well, despite the fact that the gold price is up year over year, we're not seeing capital flows into the junior sector. It's quite kind of concentrated amongst the larger cap companies. And so for smaller companies like ours, I think this is still a buyer's market, and we're demonstrating that, we're executing on that. Look, when we get to a point where our inherent cost of capital, measured by our enterprise value to our global resource and those types of valuations, starts to reflect something closer to historic normal, and we're not anywhere near historic normal in terms of where resources are being valued right now, that would be for us the signal to say now we're transitioning into the next phase of this strategy.
Excellent. Well, I look forward to hearing more as the year progresses.
Thank you, Bob.
Thanks for joining us. Stay tuned to kitco.com for more from the PDAC in Toronto.